Okay, here we are, part 3, tax planning in retirement. So what do I want you to think about now that we've gone through income and where our income's coming from, that asset location? We need to think about the types of deductions and credits against that income. So what do we think about when it comes to tax deductions? Tax deductions for most people are either your standard deduction. Some of you may still itemize. I rarely see that. You may also think of a deduction like, hey, I'm contributing to the grandkids 529, or I just gave some money to charity, so money to my church, or I have healthcare expenses, and do those healthcare expenses exceed 7.5% of your adjusted gross income? Because in a lot of these cases, you'll think that you're able to deduct something, and frankly, you can't. Why? Most of the time, it's because your standard deduction exceeds all these other things, okay? So you're not able to itemize. So the drop off to Goodwill, you can't deduct that because you're under standard deduction. The gift to your local church, can't deduct that because you're under standard deduction. So really understanding standard versus itemize will help you understand what you're actually deducting on your taxes. And for most people, again, unless you have a business, your tax deduction is most likely your standard deduction. Okay? So a lot of those other things you're really not even getting as a deduction. Now, as for credits, it's a little bit different. So if you look here at this chart that I have, we run this for our clients to give them a sense of what's deductible or what they could get a tax credit for. As you can see here on this chart, one of the credits in there is for lifetime learning credit, right? So you decide in retirement, I'm going to take a couple college classes I'm interested in, I pay for them, I can take my lifetime learning credit, yes. And a credit, a tax credit, is a dollar for dollar reduction of the taxes you owe. So we love credits. Deductions are great, don't get me wrong, but credits, we love them, okay? So anytime you can get a tax credit, you want to do that. So think in this chart on clean vehicle. You just buy a brand new electric vehicle. Depending on how much money you make, you may be able to take a credit for that, as you can see. But for some of you, you can't do that because you make too much money. So I've listed this chart here just so you can see sometimes you may be, in this case, like my client, phased out on some things, able to take the deduction or under in others, or get the credit. So understanding this is really, really important. This is the most understood section of credits versus deductions. I'm going to talk about how you take these deductions and all that income that we covered in the other parts and how to make a big difference in your tax bill in part 4.